the development of the Asian bond markets and the role of credit rating agencies in such development. To me, the two are interactive related. Issuer and investor in bonds, particularly corporate bonds, need ratings and therefore stimulate the development of credit ratings. Vice versa, the availability of ratings facilitate the development of bond markets. And therefore, I would like to share with you some of the background information about the overall Asian bond markets, the user of the market, and how credit ratings can be fit into it, and then end by offering some observations, questions about the challenges and prospects for Asian credit rating agencies. A lot of the material on the Asian bond market I draw liberally from the excellent work that John Sturmer, my next speaker, and his colleagues at the ADB has done in the Asian Bond Online, and I strongly recommend you, if you haven't done so, please go to that website, which has excellent information about the Asian bond markets. First slide, please. Since the financial crisis 12, 13 years ago, Asian leaders has made it a key policy objective to develop Asian bond markets for a variety of reasons, for efficiency in the intermediation of savings, and for enhancing the resiliency of the Asian financial system. And indeed, if you look at this chart, there has been a phenomenal growth in the outstanding volume of Asian bond markets. This is emerging Asia, that is not including Japan. 5.7 trillion as of the end of last year, more than 10 times growth over the past 16 years. However, if you take out China and Korea, the remainder of Asia, the ASEAN country, still accounted for a very, very small portion of this 5.7 trillion. And again, as you can see, most of that, 2/3, is accounted for government bonds, only 1/3 corporate bonds. Next slide, please. And here we are in Japan, very significant amount of bonds, government bonds, and seems to be growing very strongly in the years ahead. A very tiny portion in corporate bonds compared to East Asia ex-Japan. Next slide, please. In contrast with the local currency bond, where governments clearly dominate, in the foreign currency bond market, mainly in the US dollars and to some lesser extent, euro and yen, the corporate borrowers clearly dominate, particularly in East Asia ex-Japan, where you see significant amount of corporate bonds in foreign currency term. Indeed, if you look at the issuance activity of last year, 2011, government bonds in Asia issue altogether only $97 million equivalents of foreign currency bonds, compared with 319 billion of corporate bonds in foreign currency. Next, please. Very important to the question of how ratings will develop in Asia is, of course, the user of ratings. Who uses ratings in Asian bond markets? Institutional investors, of course, are the key. It's also the key to the further development of the Asian bond markets as well. And here we can see that so-called contractual savings institutions, including pension funds, life insurance companies, and asset management funds and companies, have grown and developed very strongly in Asia in the past 10 years, still very much smaller than the equivalents in the West, in the US, and even Japan. However, they already have played a very strong role in their domestic bond markets. For example, in Korea, such institutional investors account for 30% holding of the total of corporate bonds issued in Korea. Next, please. Also, another phenomenon that has become very clear only in the past 5 to 7 years is the increasing international investment in the local currency bond markets in Asia. Here, if you look at Indonesia, foreign investors now accounted for 30% of the outstanding of bonds in Indonesia, 26% in Malaysia, and between 6 to 12% in Korea and Thailand. The key point to get from this is that most of these international investment in the local currency bond markets of Asia come from international investors, global investors, to be clear. Regional investors in the sense that investor domicile in Asia, in one of the Asian countries, investing in non-home country within the region still is a very tiny portion of this increasing foreign holding of Asian bonds. The reason is manifold. Many surveys have shown that Asian bond investors have a very strong home bias, and the home bias seems to be strengthening even more over the past 5 years. Outside of their home country, they have basically an indifference between regional bonds and global bonds. To them, these are foreign. And when they look at foreign bonds, basically they search for, no surprise, return, risk, liquidity, and market infrastructure. According to these 4 characteristics, regional bonds sometimes rank worse than international counterparts, in the sense that Asia has a strong correlation in terms of economic activities and therefore interest rate movement. Therefore, the diversification benefit of an Asian country investor investing in the region is less than the diversification benefit that he or she can get by investing globally. And I think that is one of the key challenges that going forward we have to overcome. Another phenomenon that we have seen is that also in the past 5 years, the key financial centers in Asia, like Hong Kong and Singapore, have truly developed into regional asset management centers where they attract a lot of asset management companies from the rest of the globe coming and have regional head office here and invest regionally. And I think that is a trend that is very important to monitor because it increases the familiarity and the sophistication of international investment in Asian bond markets. Next, please. Against that background, it is no surprise to see that many credit rating agencies have sprung up over the past 10 years in Asia. I am told that there are now, the list I have here, this list and the next slide show 38 credit rating agencies in 15 Asian countries, but I'm told now that the numbers has reached 80 rating agencies in Asia, about 30 of which are members of ACRA, the Association of Asian Credit Rating Agencies. Next, please. So against the background information that I went over fairly quickly for you, I would like to offer you some of my observations about the prospects and the challenge, as well as the opportunities for Asian credit rating agencies. First, domestic ratings. Most of the rating agencies that you saw in the list that I just showed are domestic credit rating agencies. They tend to rate mostly domestic issues, mostly for the use of domestic investors. They have the local knowledge, which is superior to arguably foreign credit rating agencies, and therefore their ratings can enjoy the benefit of that. However, they still face several challenges. One is the standardization of what they do in terms of methodology, in terms of rating scales, in terms of communicating what they do so that the wider investing public understand and have a reliable rating system for them to use. Accuracy in the sense that when they rate an issue at a certain level, that issue should be conforming to the historical performance of such rating categories that have been the case in the past. For example, if they rate a company A, and in the past experience, A-rated company will not default within the first 2 years of ratings and will have a probability of default of, let's say, 0.2% in year 3, then any single A rating that they give should conform to that performance. And that accuracy track record can only come with time, so that they have built up enough track record to show that what they rate is conforming to what people should expect. Stability is also important because a rating should not change too much within a short time frame, and therefore the rate of retention of a rating should be quite high, at least in the first year of rating. Last but not least, the governor has already mentioned comparing apple with apple. Comparability is a key. At the end of the day, ratings is a form of relative ranking. to help investors make the decision where to allocate his resources. And therefore, when he decides A-rated bond issue here is better than here, the A or the single A or the triple A, the scale of the rating have to have the same meaning, has to be comparable, and have to be reliable. So those are the issues that domestic rating agencies have to address. The users of their ratings tend to be local as well. Domestic issuer required by many countries in Asia, not all, but majority, require particularly corporate issuer to obtain a rating before being allowed to issue bonds, and by institutional investor also domestically buying domestic bonds. Their prospect for growth, in my view, being a domestic rating agency, if they don't extend to become regional credit rating agencies, would be to aspire to become used in a supplementary way to the internationally recognized rating agencies. Next, please. In addition to domestic ratings, we have regional ratings, which is where any aspiring agencies domiciled and established in Asia have to compete head-on with the regional activities of the global rating agencies, where they indeed can bring some local knowledge of the region, but however, the requirement for them to be demonstrating a comparable methodology, comparable rating scale, comparable track record, so that they can be used as alternative to the regional ratings of the global agencies is very intense. The user of regional ratings tend to be issuers who want to issue and tap international capital markets, tend to issue in foreign currency, and therefore the international comparability dimension is more important. Last but not least, the rating for the region more and more have to appeal directly to the global asset allocators, and therefore they have to be seen as comparable to the ratings used for other regions. Last, please, next one. And based on those observations, I think that in terms of prospect and challenges going forward for the truly and domestic rating agencies, if they could improve on their problems, their capacity, and their methodology, they can aspire to become supplementary ratings to the international investor base, in addition to, of course, their domestic investor base and corporate issuers. For the regional rating agencies, of which there are a few aspirants in the region, they really have to overcome the comparability issue because they are in direct competition with the regional activities of the global agencies, which is not a very easy thing to do. Going forward, I think that, as again, I said at the beginning, development for the rating agencies cannot be divorced from the developments of the underlying bond markets, which has many factors to determine its future course of development. And therefore, I think that the two will continue to develop quite in line with each other. And with that, thank you very much for your attention.